Wasting money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deeper seas, hoping to find something to bring back better times. Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can't be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Hi there, welcome everybody. Welcome to the latest in our series of live revision events, our live streams. We've got a lot to pack in today. We're going to look at macroeconomics, ADS analysis, economic cycles, and some questions on the multiplier. So before we do that, a quick reminder that Sporting Fire has been looking forward to this. It's been like people who sleep outside shops ahead of big sales, hours before, logged in, waiting for this live stream to happen. Quick reminder, we are heading on our travels. In a couple of weeks' time, we will be in London, that big city, with 4 gigs, 2 for AQA, 2 for EdXL, at White City and at Stratford. So if you want to join us, it would be great to see you. We had nearly 8,000 students across the subjects a couple of weeks back in London, and tickets are selling fast. So please do go onto the website if you want to come along and join us for our grade booster days. Let's make a start in terms of our questions today. I've got 4 questions on cycles, and then I've got a few other multiple choice questions on the multiplier right at the end of the session. So we're going to bookend this little session with multiple choice. Here's the first question. Which of the following best describes a likely characteristic of the UK economy during the boom phase of the cycle? So this is the different stages of the economic cycle. Answers are flying in. Those of you watching live, just check out the live stream. And if you're subscribed to the channel, then post an answer. Everybody's saying B. Let's double check. Indeed it is. Yeah. And in particular, when the output gap becomes positive, when AD is ahead of potential output. Right. Everybody's made a great start there. Here's question number 2. Which of the following is least likely to occur during a downturn in the UK economy? What do we think? These are questions that PF students often find a bit annoying. Really, least likely to happen during a downturn or a recession. What do we think here? business insolvencies, retail sales, base interest rates, and wage growth. Louis, Alex, Harry, Sam, Ollie, JT are great contributors. Maisie and Zara all saying D, and the answer is indeed D. Yep. That's one of the causes of cost push inflation, isn't it? As wages, as the excess supply of labour shrinks, that causes wage inflation. Number 3 coming up. What is a likely fiscal consequence of a recession in the UK? What is a likely fiscal effect of a recession in the UK? What do we think here? And 4 options there. We're watching the live stream as it comes through. There's tremendous. By the way, yesterday I thought the quality of answers was just insane. It was nuts. I think we can do even better today. Most people saying C. I don't think there's any dissenters. Let's double check. Yeah, it is C. And the key thing there is automatic stabilizers. In a recession, the budget deficit automatically goes up, providing that the government allows the automatic stabilizers to work. By no means certain. They can sometimes step in and tweak fiscal policy. Number 4, question number 4 is a past exam question. In the diagram, an economy is initially in equilibrium at point X. The government increases spending on education. This coincides with an increase in wage rate inflation. Which point shows the most likely short-run equilibrium for the economy? What do you think of that? Nishita has asked a question, what are automatic stabilizers? Basically, it's where in a recession, the government takes less in tax and puts more money in spending. So it helps to stabilize aggregate demand. Most people here are saying C. Let's double check. It is indeed C. Inward shift of supply because of the wage inflation, increase in aggregate demand because of government spending on education. Superb stuff. Right, let's move on. I've got 2 bubble quiz questions for you. So here the challenge is, how many of these are correct answers? 1, 2, 3, 4, or none of them, and which letters do you think are correct? So please do post in the chat window. Which of these is likely to cause an inward shift of short-run aggregate supply? I wish bubble quizzes were in the actual exam itself. It's a more sophisticated, nuanced question. So what do we think? So Peter's gone for A and D. Flora and Sam agree. Sporting Fire, don't forget, has been with us waiting patiently for 6 hours before the live stream. He's gone for A, B, and D. Leanna's gone for A and D. Most people saying A and D. What about B? Interesting. Well, here's the answer coming up. It is A and D. Correct. An appreciation of the exchange rate makes imports cheaper, and therefore that's an increase in leakages from the circular flow. A, a rise in unit labour costs, and B, an increase in the price of copper. Great stuff. B would make raw materials cheaper, as Alex points out correctly. Well done, Alex. Good point. Just quickly on the exam side of things, moving on to the next slide, let's just take the idea of this copper price. Sometimes you get a draw a diagram question. You certainly do for Edexcel, but you might be using a diagram, for example, with the AQA 9 marker question. So I just wanted to quickly take you through a very, very important bit of exam technique here. So use an ADS diagram to show the impact of an increase in the copper price for an importer of copper. So here's our initial equilibrium. I've taken the output just below potential, neoclassical model. Let's move to the next slide. The increase in the price of copper causes aggregate price shift to the left. Notice what I've done there. I've put in brackets there higher import costs. And that just tells the examiner that's the root cause of the shift in the curve. And that would normally be absolutely fine as a diagram. But keep in mind that an importer, so they're paying more for their copper, imports will go up. So the next slide shows a fall in AD because the net trade balance would deteriorate. Both factors are negative for output, but the fall in net trade could act as a fall in inflation because there's an outflow from the circular flow. Now, what I want to make to you here, thank you, first of all, coming to our revision sessions. We hope you find them useful. But that's a developed diagram because you've shifted more than one curve. And that's what the exams are really looking for those top 2 grades. B grade for sure, AA star definitely. Try and shift those curves. But a little labeling there, higher import costs, fall in net trade, helps the examiner follow your chain of reasoning. Here's our second bubble quiz question. Which of these is likely to cause an outward shift of aggregate demand? What do we think? So, 4 options there. How many of those do you think are correct? Ollie says, why did I draw a long and aggregate play on that? I did because I just wanted to. I like drawing that curve. And it tells us where the economy is relative to potential. So, Phoebe has gone for B and C. Kai's gone for A, C, D. Zoe's gone for B, C, and D. Leanna agrees. So does James Muir. And Jafar has gone B, C, D. Quite a few of you going for B and D, which is good. Kai says not A. Let's double check. Well done, Kai. Great answer. So it's B, C, D. So well done to James and team. Yeah, we think B is obvious, isn't it? An increase in income tax allowances means people keep more of their incomes. But a depreciation does cause a net increase in AD because of the export effect. Okay, but an increase in the ratio of imports to GDP means is the M bit of C plus I plus G plus X minus M has gone up, and that would be a negative for demand. Mortgage rates, they're very interesting. I think this could be a topic. I think the next slide has a chart showing mortgage rates. Just keep this in mind as a possible macro question. This is what's happened to mortgage interest rates in the UK just since 2000. And you can see we had a decade or more, particularly after the global financial crisis, when the cost of mortgages was falling in nominal terms. We had an era of very cheap mortgages. In fact, if you take off inflation from those numbers, you can see that the mortgage rates are actually negative in real terms. But then 2021, 22, the steep rise in mortgage rates, in part because of the trust budget, but other factors as well. We're just starting to see mortgage rates coming down. Follow the green line there. Why I'm asking you to follow the green line, because I've got a 2-year variable rate mortgage. I'm really hoping it's going to come down in the next few months. But mortgage rates could be a key paper 2 topic. Okay, let's crack on. No time to waste. I've got 3 questions for you on the current, obviously hot topic. I just want to say a couple of things. First of all, about the exam, and secondly, how you could use this. Your exam was set last year. They're not going to rewrite the exam papers now. They're already been printed and sent out to schools and colleges. Okay, so your exam was set last year using data probably 2023, early 24. However, the really switched on students, and there are hundreds in this live stream today, you can and should feel confident in referring to what's happening at the moment. Obviously, this is a very unpredictable, chaotic, uncertain time. Because it's a big shock to the world economy. It's both a demand and supply side shock, especially for countries who are heavily dependent on trade. Less so for the States, funnily enough. They only export 10% of their GDP. But countries like Cambodia and Vietnam and Malaysia, those kind of countries. So the breaking news, I'm sure you followed it last night, is that Trump has pressed the pause button on tariffs, in part because of the bond markets starting to sell government bonds. So every country now has the universal tariff of 10%, except for China, multiplied by 10, 104%. But cars, steel, aluminium, still 25% tariff, and that will extend to car parts in May. So UK car exporters still exposed. But clearly you can see from the chart there that this is one of the biggest shocks the world economy has seen, certainly since the pandemic and the global financial crisis. So what I would suggest you do is maybe just have a little page in your revision notes for the Global Trade War 2025. Just make sure you've got a nice little page of notes and thoughts and comments. Maybe this next 5 minutes will help. And then just add it into your revision notes for any question on the world economy. I've got 3 questions for you. Here's the first one. Let's see what you can come up with in the live stream. I'm really excited to see what you come up with. Can you give me 2 possible macro disadvantages to the UK of President Trump's tariffs? Let's start the clock. So do have a go if you're watching live, and we will post some of the best answers on the screen as a showcase. a positive torrent of really great answers. We'll keep an eye out on the on the live chat. Liana, global supply chain disruptions, increased input costs, SRS shifts left, cost push inflation, decreased competitiveness for UK exporters overseas. Some great stuff. What have we got? People talking about cyclical unemployment. Joe Kent here talking about worsening the current account, and I think James Muir also said, look, there's going to be a direct export consequence on the current account, depending, of course, on PED for UK exports. TVK talks about retaliation. Sumat talks about huge economic uncertainty. This is a really good point from Sumat, so let's just give that a moment. The uncertainty is often the pervasive impact. Keynesian animal spirits, worsen, and that can affect planned investment as well as planned production. And I think that's it's risk and uncertainty in economic systems. They're often really quite fragile. Some great points coming through. Ben Hughes talks about low availability of capital on financial markets as animal spirits worsen. And that's what we saw yesterday, actually, Ben. We saw the financial markets really the bond markets taking the lead. And once bond markets move, I mean, Trump can ignore the stock market, but he really can't ignore the bond market, especially when the US government has to issue so much debt. So some great stuff there. Thank you for those points. If it's okay, because of time, here are my two. I've gone for reduced exports. In the example, I keep things simple, okay? There's credit for just being nice and straightforward. Tariffs increase the price of UK goods in the United States. US consumers and firms might switch, hedging word, to cheaper domestic products. So there could be a worsening of net trade, which James links to the current account. And also, please put in the negative multiplier effects. So depending on PED, the volume of exports might decrease, and then there are wider multiplier effects. And also the supply chain disruptions. So many exports, of course, use imports. The tariff war really does threaten to disrupt global supply chains in the same way that the pandemic did. Intermediate inputs may become more expensive, some things becoming less expensive, crude oil, for example. But it may well be the case that exporters who need imports make lower profits as a result. So most Economics 101, which, by the way, Trump didn't pass when he was at UPenn Wharton, Economics 101 suggests negative consequences. Let's evaluate on the next question. Here's a minute for you on the clock. Who can think of potential macro benefits of import tariffs from the States? Over to you. This is harder. Well done, everybody. Some great answers continue to come through. We do our best to pick out what we can. Obviously, we can't show all the contributions. That's impossible, but huge thanks for doing it. Charlie May Walker had a really good point about, what was Charlie's point? Coming in about better relationships with the European Union. That is a really good evaluation point. This might be a catalyst for greater trade relationships with other countries like the EU. So it may well lead to a reconfiguration of existing trade relationships. Canada, for example, considering joining the European Union single market or the customs union. And Hannah says, could switch to domestic producers, but this is long run. Keep in mind, Trump is only in office for 4 years. We think that's the case, Hannah. We think that's the case. There's a rumor going around Washington that J.D. Vance will stand for president next time with Trump as his VP, and that Vance will then retire gracefully about a week after the 2028 election. Some great points. By the way, Charlie May Walker asked the question, what's animal spirits? Animal spirits is a Keynesian idea. It's all about feelings of optimism or pessimism. And animal spirits, if you're optimistic, you make those investments. Trey comes in with a lovely point. Thanks, Trey. Increased domestic investment because global supply chains may encourage firms to onshore production or trade with more stable economic systems. There's so much uncertainty there. It's very hard to isolate one effect from another. Here are my 2 points. Conscious of time, everybody, today. Trade diversion and a slower global growth. So if China has 104% tariff, or maybe even higher, imposed by the States, then actually paradoxically, even with a 10% tariff, UK goods might become more, in relative terms, cheaper compared to Chinese products. So there might be some expenditure switching. It's unlikely because a lot of things the UK exports to the United States are services rather than tangible things like washing machines and irons. On the other hand, other countries hit by tariffs may lower their export prices to compete in markets such as the UK. So Chinese producers may have now plenty of spare capacity because they're not exporting to the UK. The same might be true in Cambodia and Vietnam and who knows, Thailand. So that excess supply has to find a market. So it may well be that your Nike shoes or your Under Armour t-shirts become a little cheaper in the UK as producers are looking to offload into the UK. Now that could lead to dumping, but in theory it could help to bring down costs, push inflation, because excess supply needs to find a home somewhere. Okay. Sporting Fire says China up to 125% now, I think. And somebody double check that. I'm sure that's right. Maybe there's been, I think that's right, isn't it? China's gone up to 125. And China has imposed a 104, I think, on the States. Who knows? I don't know what's happened in the last 10 minutes. Now, this is the really hard question coming up. We have some great economists in this group, many of whom have got offers at top universities. Right? So here's the challenge. Can you give me one or two ways in which countries can absorb some of the impact of higher tariffs on their exports? Think about a country like China or the UK or Japan, for example. Evaluation points. Have a go. So a country might have a 10% tariff imposed by the States on their exports. How can they respond, react, absorb? And it's not just retaliation we're looking for. We're looking for other policies. And some great answers coming through already. Well done. Just right at the end, as the minute clock peeled away, people start talking about the exchange rate. James Longley came in. I was looking at the screens here, and James came in with a lovely point about managed exchange rates. Me talks about devaluing the exchange rate. I think this could well be one of the consequences, though it is, if the currency is managed devaluation. James, can I be really picky? If it's a managed floating exchange rate, then it's a depreciation. But if it's a semi-fixed system, aka the Chinese system, then yes, it is a devaluation. Evie came in with some good points about interventionist policies, developing human capital, long-term strategies to go up the value chain so your exports become less price sensitive, so the PED for exports goes down. Sachs, welcome to Sachs, says, I watched you last year and you got me an A-star. How kind, how lovely, and welcome back, by the way. Great to see you again. And Nathaniel, I was looking for this phrase. Nathaniel talks about tariff hopping. Let's talk about that in my answer. Some brilliant answers, everybody. Absolutely superb. Here are my 3 points. I've gone for managed depreciation, export subsidies, and rerouting, or as Nathaniel calls it, tariff hopping. So you might get some countries starting to ask their central banks to intervene in currency markets. So if you can get a 3, 4, 5% depreciation against the dollar, that might help to absorb the impact of a tariff. Although, downside, your imports become more expensive. Many governments thinking about supporting their export sectors, export subsidies to offset losses. Expensive, Nice diagram to draw. Consequence, this could open a country to WTO disputes if they're seen as distorting further trade unfairly. And then the thing that's happened before the trade war, the rerouting or the relabeling of trade. So exporters shifting supply curves or relabeling origin to avoid a tariff. So assembling in a third country. So China moving some production, for the sake of argument, to Mexico or to Vietnam, and then re-exporting to the United States. Under the old USMCA, of course, Mexico attracted a lot of FDI. Now, if they ask you a question on Mexico, the exam question will not have changed in the wake of what happened last week. But Mexico grew very quickly because of tariff hopping. And then they re-exported into the States. Football fan enthusiasts, I hope you're a fan of Harrogate Town in particular, can explain tariff hopping. I've got a short video on the YouTube channel, but basically you relocate, let's say you've got a big tariff on your goods, you relocate to a low-cost country, manufacture there, and hope they don't have as big a tariff imposed on them, so you can go through the back door into the country, your export market. Divine says, what are WTO disputes? These are disputes where one country goes to the World Trade Organization and says, this is an unfair subsidy, or this is unfair dumping, or this is an unfair management of the exchange rate. And the WTO is set up to try and resolve these disputes, but hasn't been very successful. And China has certainly sent some complaints just in the last few days. Don't know why, but it has. Our Sporting Fire says there's not much point in the WTO anymore. No, it's probably an organization that is no longer fit for purpose. Global regulatory failure. Okay, well done. Let's just do one more on the macro side, conscious of time here today. Now, this is something you won't have thought of maybe, but I'm going to ask the question anyway. Carbon pricing and macroeconomics. So UK's left the single market, left the EU. It's got its own emissions trading scheme now. So companies in power generation, in airlines, and any energy-intensive industry like heavy manufacturing, you have to buy carbon permits, initially auctioned off, and then you have to buy more if you emit more pollution. Now, if we go back a couple of years, the price of permits was £100 per tonne, quite a heavy carbon price. Look what's happened in the last 2 or 3 years. I'm thinking from an exam point of view now. Okay, the price of carbon permits has more than halved. Last time I looked, it's actually now, okay, basically around £35 a tonne. Quick one, last question today. Can you give me one benefit and one cost for the economy of the sustained fall in carbon permit prices? 1 minute, have a go on the clock. Yeah, make it clear if it's a benefit or a cost in your answer. Okay, answers coming through. There's Thomas's answer. Benefit, lower cost for firms can increase short and aggregate supply. Cost may increase pollution and emissions. In other words, it might be harder to achieve your net zero targets. Yeah, Rory Lashbrook, thank you for joining in, Rory. I'll come on to Rory in a second. James, if we go back to James's point first, thanks, Jim. So James Muir talks about, so there's Rory's point, benefits reduced cost of production. Yeah, and I think James is the same point, outward shift in aggregate supply. But nice link there to long-term environmental degradation. So some good answers coming through. Benefits reduced cost of production, cost of increasing carbon emissions. Now, great stuff, really good stuff. Here are my 2 points. Just want to finish off with some multiple choice. I've gone for, impact on inflation and consumer prices. So cheaper carbon permits, aviation keeps airfares down, power generation perhaps keeps energy prices down. So that could help to bring inflation lower. Maybe it's above target at the moment, which could in turn lead to lower interest rates. On the other hand, the downside, the cost in red, lower carbon prices make it financially less of an incentive for firms to switch to renewable energy. So there's the risk of an underinvestment in renewables, which could have consequences for the number of green jobs and dynamic efficiency in clean sectors. So keep this in mind. It's a little bit of a left field question, but what happening in the carbon market does have consequences for the macro economy. What I'm doing here is Jason says, are these the most likely questions to come up? I don't know. I'm always thinking in these sessions as an examiner. Okay, can't tell you how many answers I mark every summer. It's in the many thousands. And I'm always thinking what might be topical, what might be interesting to test your understanding of economics. To finish with, let's try a little challenge. Have you revised the multiplier? I've got 5 questions for you on the multiplier. Please do have a go. The last one is nuts. Okay, so test yourself. Who can get 5 out of 5? And if you do get 5 out of 5, post it in chat. How does a high marginal propensity to consume affect the multiplier? What do we think? Post your answer in the chat window. Does it increase the size, fall, lower the impact of public investment? Okay, everybody, including one of our great leaders, Ollie and Lucas and Maisie, saying it's C. And the answer is C. Question number 2. If the MPS is 0.25, what's the value of the multiplier? The marginal propensity to save is 0.25. Then what is the value of the multiplier? Presume that means the MPC is 0.75, doesn't it? So what is the value of the multiplier? Ashton, Hannah, Zoe, who incidentally Zoe made a great point about FDI in the previous question. Rory, so confident he's pressed it 5 times. Let's double check. It is 4. 1 divided by 0.25, or work out the MPC there. Okay, number 3. Given the MPS is 0.1, the marginal propensity to tax is 0.2, the propensity to import is 0.2. So the extended multiplier, which you need to know for Edexcel for sure, what is the multiplier using 1 divided by the marginal propensity to withdraw? This is particularly for Edexcel students, where you have to know that there are 3 leakages in the circular flow. So you need to be able to calculate a multiplier given that information. The answer's coming through. Most people saying it's A. Let's double check. Yes, because the sum of the leakages there is 0.5. So MPW is 0.5. 1 divided by 0.5 is 2. Right, 2 more questions to finish. The last question is hard, by the way. Why does a high marginal propensity to import reduce the multiplier? Apparently, Tom is saying not for AQA, but definitely for Edexcel, question 3. Okay, so that's why I put it in. Okay. So why does a high propensity to import reduce the multiplier? What do we think? Answers flying in from Jishan, from Bruce, from Zoe, from Louis. What do we think here? A lot of people saying, a couple of people saying C. The answer is D. Income is spent overseas, it's not recycled in the circular flow. Let's finish off with the last question, everybody, today, our half-an-hour session. Country X implements a government stimulus of £20 billion. The resulting final increase in national income is £45 billion. Assume a closed economy with no taxes. What is the marginal propensity to consume? This is the hardest multiple choice question. If you go to ChatGPT, create me 10 insanely difficult multiplier questions. This is what they'd ask. So 20 billion stimulus, final change in national income is 45. You can work out the multiplier from that. Ignore taxes, ignore imports. What is the marginal propensity to consume? Answers are flying in here. big difference of opinion between A and B. And I can tell you it is either A or B. And this could affect people's score. Let's have a look at the answer. It is B, 0.56. Football fan enthusiast says, how do you work that one out, Geoff? Well, here we go. Here's the explanation coming up on the screen. The multiplier is 1 over 1 minus MPC, or 1 divided by MPS. Now, we can work out the multiplier. It's 2.25, 45 divided by 20. So therefore, 1 over the MPS must be 2.25. If you rearrange, the MPS is 1 divided by 2.25. So the MPS is 0.44. And the MPS plus the MPC is always equal to 1. So the MPC must be 0.56. Put your scores, please, in the chat window out of 5. We'll keep a look at, and Arian's claiming 5 out of 5. Arian, can you hand your paper? And Ashton's actually done it even better. He must have played his joke on that last question. Finn, we got work to do, but we love you in the group. Evie, 4 out of 5. Was it the last question that did for you there, Evie? Who knows? JT got 4 out of 5, one of our great contributors. By the way, go to ChatGTP and just take a topic from the spec, post it and say, please create me 10 multiple choice questions. Make sure they're high level of difficulty. Make sure the answers have plausible distractors. Keep practicing multiple choice because it will work for you, especially at OCR and AQA, where you've got so many questions on paper 3. Brilliant. So somebody got 6 out of 5, which is a bit like my credit, a bit like my debt. It's outstanding. Does Rory get bonus points for putting every answer 10 times? Yes, because the YouTube algorithm loves people like Rory. Federica says, are there any more live streams? Yes, we've literally just posted. We're going to do 2 next week. Now, I know we're coming up to Easter next week. Family and friends, or in my case, family coming to stay. We're going to do 2 on Wednesday and Thursday. I think Wednesday, Jim, the producer, will let me know. I think Wednesday is financial markets, because people ask for a special on financial economics. Or maybe it's market structures on Wednesday. And then Thursday, just before Easter, we'll do financial economics. Okay? Great stuff. Utterly fantastic. Hundreds of you in the live stream today. Thank you so much. We don't take these sessions for granted. You turning up and helping and contributing is a wonderful thing for us. We enjoyed doing them. So I hope you found the session useful. If you did, consider pressing the like button and maybe subscribe to the channel. Keep the revision going. If there's any topics you want us to cover in future live streams, please do. We've got a minute or so. Please do post in the chat and we will add them to our list and build some sessions around those. Quick reminder, we're on our travels again. At the end of April, we go to that wonderful cinema that will view Stratford, right next to the tube station, and then we go to view Westfield White City. We love our week in London after Easter. We get literally hundreds of students booking independently or going with their mates and saying, look, I want a day. I want to do a day of economics or history, psychology or sociology or business, whatever it is. I want to do a day's revision. Sorry, not history. Politics, is what I meant to say. And they're great fun. We have a fantastic team. So if you are coming, please do buy a ticket and then come and say hello on the day. Huge thanks, everybody. I have to sign off now because business are waiting in the studio to take over. So as always, thank you for joining in. Stay happy, stay healthy, stay curious, and we hope to see you sometime soon.